Hello everyone. Today I am going to provide you with an overview of MCX FNO Crude Oil Weekly Technical Outlook for the period 21st of November to 25th of November from PhillipCapital India. Prior to giving and sharing the view for the coming week, let's take an overview of the last week outlook and its outcome. So last week, crude oil ended at 7124 levels, and we have mentioned that the bias will be slightly raised to positive over and above 6500 mark with a hurdle zone of 7800 to 8000 levels. And as we can see here on the charts, since last so many weeks, it has been consolidating within a range of 6500 and 7800 on the higher end. And as mentioned, the bias continues to be buy on dip and sell on rise. So same outlook we have mentioned last week, that any pullback towards 7800 to 8000 mark can be looked for sell on rise, while on the dip towards 6500 mark can be looked for a contra trading long positions. Now, if we see how things panned out last week, then here we can see that crude oil last week made a high of 72.62 levels, and thereafter it slipped down to the lows of 6313 on the lower end, and it bounced back marginally towards 6542 before ending the week in deep red, down 8% at 6542 odd levels. So basically, if you see, then this consolidation of 6500 to 7800 levels continues to hold. At the same time, if you see this chart, then on the lower end, 6000 remains a very important support trend line support zone. So initially for this week also, we continue to hold the same outlook, that though the bias will remain range to down, trading below 6900 mark, but on the lower end, 6500 will remain crucial, trading below which it can even retest the support zone of 6150 6000 mark. So initially, any dip towards 6150 to 6000 can be looked for contra trading longs, keeping stop below 6000 levels on the closing basis, and holding over and above 6500 mark. The pullback can be expected towards the highs of 6900 to 7000 zone. So overall, if you see for this coming week, the broad zone for crude oil can be between 6100 to 6900 mark with buy on dip and sell on rise outlook. Now, if you see any few strategies which we have shared last week, then as on 18th of November, when the crude oil was trading at around 67.20, we have recommended a three-leg strategy with a bias pullback, and here the break even was at around 7050 levels, and this strategy is of 15th of December expiry. So what we have done is that we have bought 6500 call, one lot, we have sold 6600 call, and we have further added long on 6700 call. So the bias is ranged to positive with a maximum gain over and above 7500 mark, and with a loss of maximum 60 at 6500 levels and below. So we are holding the positions. Last week when we have initiated, it was trading at 6720, but the week ended crude oil at 6540 odd levels. So this strategy was marginally in red. The other strategy which we have initiated was as on 14th of November in gold, and at that point of time, gold future was trading at 52,580 odd levels. So what we have recommended is buying in 52,500 call and selling in 5300 call with the expectation of a pullback. So this strategy was for the expiry of 24th of November, and as on 16th of November, we have seen that gold made the high of 53,200 levels. So as on that particular date, the closing was of this strategy was at around 11,400 mark. So this strategy though was in profit, but thereafter we have seen that gold also retraced back. So we are still holding the positions with a potential maximum risk reward at around 53,000 and 52,500 levels, as seen on the payoff diagram here. Few other strategies which were initiated this series was one in gold. That too was initiated as on 2nd of November, when gold future was trading at 50,750 with a bullish bias. This strategy partial profit was taken as on 9th of November, and the maximum gain in this strategy was over and above 51,000 mark to the tune of 44,000 per lot. Another strategy was in natural gas, which was initiated as on 2nd of November itself, when natural gas was trading at 493. The bias was bullish with upside cap towards 600 mark, and as we have seen that natural gas has made the high of 592 before slipping down, and last week it ended at 513. So in this strategy, the maximum gain is at around 1,19,000 per lot at around 600 levels with expiry of 23rd November is around those levels. Another strategy was initiated in crude oil again, and as on 2nd of November, the strategy was initiated while partial profit taking was taken on 7th of November at 9,700 per lot. So current strategy is slightly in red, but that strategy has actually squared off because these legs were for the expiry of 16th of November. So this was the outlook and few strategies which we have recommended based on the technical and the open interest in MCX crude oil. If you found our content relevant, then kindly get in touch with us with your queries, and you can also expect our reports and strategies which we'll be initiating in weeks to come. You can contact us on the given mail ID and the contact details. Thank you very much for your precious time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.